Hi everybody, Bruce Girdwood here. A lot of you will know me from Monday and Tuesday evening Euro Open LTR. The purpose of this little presentation is to share with you how I approach coaching and to introduce myself as a new IDTA coach. My journey for trading has started in 2016, and as a lot of you will know, that's been a fairly interesting journey. I've been all over the place. I've learned a lot of things about myself, and it has been an intensely personal development process. A lot of you will be experiencing exactly the same, and each one of our journeys are separate. So I would like to just share with you my approach to trading, so that and to coaching, so that you can get a sense of how I would approach a coaching session with you. I'm just going to share the right screen. All right, so for each one of us, trading is a journey. And I'd like to look at the different components of that journey and then translate that onto the way that I have learned my trading and how I develop a coaching approach from that. All right, so our approach starts with technical analysis. So we need to learn what price action is, what support and resistance is, and what the context is for executing a trade. Bringing all of those things together gives you an idea of where to enter and exit a trade. From that, you can develop a trading plan. And when we start working through these in the intensives course, you get the bare basics for your trade. And at that stage, it's like getting into a car for the first time. You think you can drive it. You also start to have dreams of big dollars. So that is our initial space for trading. And most new traders consider this to be most important. Once you start on the journey, you realize that once you've placed a trade, the market can take and the market can give. So capital protection becomes really important. You don't want to have your first trade swallow up your whole trading account, for example. So we need to understand where to put our stops and targets. Once we're in the trade, we need to manage we need to understand how to manage that trade, and we need to develop the statistics for our trading so that we can build confidence of getting into the conditions that we have determined in our trade plan that is assessed at the beginning of the technical analysis. And we need to test ourselves through sim trading, and then we need to manage ourselves through sim trading to live trading. And at this point, you realize that when you get into the car, it's not as easy to drive as you thought, and reality starts to dawn. And perhaps there is more risk than you thought, and you have to be really careful about your trading. At which point your emotions start to come to play, if they haven't already. So you find that there's emotional chaos generated by the market. One of the reasons for this is that a market is a very unconstrained environment. It sets no rules for you. You have to set your own rules. And this is what this framework helps us do. And once you start creating those guardrails, you find that your emotions start to come under control. But your emotions will have an impact on your trading. So, for example, if you are fearful of any retracement and one happens, your tendency will be to jump out of the trade. That is a guaranteed loss, only to then watch that trade turn around and pay. So understanding those emotions and what actions they drive is really important, because you then need to reflect on those actions driven by those emotions in order to understand what you have to do to manage those emotions into a different place or control them so that you do not get those guaranteed losses. So you have to learn patience, discipline, and above all, accountability. And you really need to do that in a way that is deliberate and drives your trading plan into a place where you can become a professional trader. So that evolution from technical analysis up to emotional control is really important. You can also build this into your trade plan, which I'll talk about in a little while. So like I said before, markets can give or take. The way we set ourselves up with our trade plan through technical analysis, risk management, and emotional control determines which of those two things happen. And we get to make those choices ourselves. All right, so how do I apply this framework to a trading plan? So for example, for me, and we can help you determine what the right approach is for you, but for me, I like to be a reversal trader, and I like to reverse off a liquidity zone with additional support and resistance close to or within that liquidity zone. And I also need to reverse with a 15 and 30-minute chart support. In other words, there needs to be confluence between my 15, 30, and 45-minute charts. Now, this is just a very high-level skeletal view of my technical aspects of my trade, but those are the core elements of it. So most new members think that this is the most important part. And once you've done that, once you've identified that, you can just go and trade. So you don't want your first trade to take all the money out of your bank. So for my trading plan, I set my risk at no greater than 2.5% of my account balance. I set my stop at the last failure point, which must be no more than 2.5% of my account balance. And I set a target of at least 1-to-1. And that is a balanced risk reward that enables me to recover a trade if I have a loser quite quickly. I do not want to have my target size 4 times smaller than my loss, because it'll take 4 trades to recover that loss. And that does not work well for me, and my stats wouldn't support it. Once I've got my risk management technical analysis under control, I can start working on my emotional control. And I trust my plan because I know its capability. I've done the statistics. So sitting behind this need to be your statistics, and you need to understand those. And I also know and understand my emotions and what responses they trigger, so that when they trigger, I can very quickly say, I know that when this emotion kicks in, I get this response. And that is a negative outcome for my trading. Therefore, I can actively manage my response to a different place so that I keep building the capability to avoid those old outcomes. And my trade plan is built to evolve myself to become more and more of a professional trader every day. And from my experience, emotional control is that cornerstone that connects a solid trading plan to trading success. So having all of these aspects in your plan becomes really important. Here's an example of the way I trade. So if you look on the 5-minute chart on the right-hand side bottom, you will see there's a big blue oval. Underneath that oval, you will see there is a liquidity zone, which is reflected on the 15 and 30-minute charts. And you will also see that there is a cluster, which is that yellowy brown color there too. And there is also yesterday's low. So the first part of my trade plan is met. There is a cluster and there is another support and resistance. I am seeing the 5-minute chart reverse. You can see where my trade entry was over here is after this little reversal trigger, which coincides with a reversal trigger on the 15-minute chart and a reversal trigger on the 30-minute chart. So the other aspect of my trade plan, technical aspect of my trade plan, is met. So we have support and resistance down here, which is the liquidity zone plus something else, yesterday's low in a cluster. I have confluence of price on the 15 and 30-minute charts, and I jump in and I can see that if I've got a 15-minute trigger and a 30-minute trigger there, I get in as those things are going to work together to take this trade forward. So all of the traders across the world are thinking the same, whether they're looking at the 5-minute chart, the 15-minute chart, or the 30-minute chart, which gives me confidence. The next aspect is the risk. So the risk is 112 ticks. If I enter at this trigger here, which is above this red candle, my risk will be 112 ticks. So my target is set to 112. If your account balance cannot tolerate 112 risk, you can move to the MNQ and take 5 contracts, which is half the risk. Now I enter the trade because all my conditions have been met and I'm comfortable with the risk. And now the emotional control kicks in. I know my statistics tell me the right thing, but my red brain and green brain start to conflict with each other once a trade goes in, particularly when it hits the MDI over here, where there is also, or the trend indicator, where there is also the gap. So I either sit on my hands and walk away, or I start to look at the charts and rationalize to myself that everything is looking really strong. Here on the 15-minute chart, we've got a big candle forming. The 30, there's a good candle forming. There's no hesitation on the 5-minute chart around the trend indicator and the gap. So you just let the trade go. So all 3 aspects of this trade plan are now met, and I am working my way through the emotions to manage myself through the trade. Right. So how do I take all of this and help people with a coaching process? First of all, we're all individuals with different needs and backstories. So the way I see the markets and the way I respond to the markets will be highly different to any other person. So our job is to work with you to find out what your goals are, what your objectives are, and what is your unique way of achieving your goals. That is not something that any coach can do for you, but a coach can certainly facilitate the conversation which takes you to the place that you are happy with. And we do this by helping you to articulate what you want, develop your strategy and trading plan. We can then work with you to help you execute and develop experience and the statistics that support your trading plan that then are practiced in sim, and then we can help you work your way from sim to live. We can, through that process, identify your unique blockers through conversations and you journaling your emotional response to trades. And we can also help you to identify strategies to help remove those blockers and unlock your path to success. And from there, we create a continuous improvement plan so that your worst performance is still successful. Jared Tendler talks about your A game, your B game, and your C game. And the A game being when you're in flow, and the C game being when you're not in flow, but it's your worst performance. Our job is to make sure that your worst performance is still profitable. To finish off, I just want to give you an example of somebody who I really admire, Roger Federer. If you were to ask him how many of his matches he won, the answer would be 80% of all the matches played. If you were to ask him how many of the points he won in those matches, on average, it's only 54%. So for him, he only needed to win 54% of the points in order to win 80% of his matches. This is what we need to help you do in your trading. And we need to find a way that works for you to give you that kind of success. So this is a high performance game. It requires dedication and hard work. And I'm here to help you with that process.